Today too, market crash. Keep in mind these 4 points. I am Dr. Bharath Chandra. Purpose of the video is Financial Education of Society. Another weak day for Indian markets. Nifty was down 1%, but mid cap 100 index was down 2.8%. Small cap 100 index was down 3.8% today. Nifty 50 changed today minus 1.1, changed from the lifetime high minus 12.8. Nifty mid cap 100 minus 2.8%, changed from lifetime high minus 14.9. Nifty small cap 100 changed today minus 3.8, percentage change from lifetime high minus 17.1%. However, such a fall was not unexpected. In fact, we have been mentioning in our videos since July-August 2024 itself that markets was due for a correction. At that time, many channel members laughed at us and thought that we are being pessimistic unnecessarily since markets were rallying every day and everything seems bright and perfect. Here are the 4 thumbnails that depicted that bear market is in store anytime. Those investors who took our opinion more seriously, especially our workshop graduates, would have prepared themselves mentally and financially so that the stock market fall would not impact them negatively. It is likely that a large number of investors would have taken the situation very lightly until now and may be regretting some mistakes such as number 1, investing money which is required after a few months. 2, expecting fundamentally weak stocks to keep rallying always. 3, trying to time the markets. 4, investing 70 to 80% of savings in stocks and mutual funds. 5, borrowing and investing in stock markets. There is also a chance that many investors would have sold stocks and mutual funds due to panic. Many more investors may exit the market if weakness continues for some more months. While it is said that many investors will exit the market at a loss, it is normal and has happened many times in the past. Weak and uninformed investors help informed and smart investors to invest at a lower price in the market. The market is testing your character and patience. At such a time, before more investors make mistakes in the markets, it is important to remind and motivate them to follow their approach with discipline. Points to be kept in mind by investors. 1. Don't stop FCP, SIP at such a time. As long as you hold good stocks, mutual funds, don't stop monthly investments in them unless your financial commitment make it difficult to invest regularly. 2. Don't wait for bottom to invest in market for long term. You will not know which is the lowest level. So invest any lump sum amount in installments or phases so that irrespective of how much markets fall, you would have reduced your purchase cost due to the phased investment approach. 3. Don't think that you can escape temporary notional loss in your portfolio. Many people keep saying that you should hedge your portfolio through F&O so that you will not incur loss when markets are falling. However, the question to ask is whether a normal retail investor has the investment capacity, risk appetite and expertise to do such a transaction. You may notice that in bear phase, many investors will lose interest in stock markets. Many YouTubers will reduce and stop the number of videos they make since they have no moral grounds to talk about stock markets since they had been wrongly recommending risk trading such as F&O and intraday to innocent retail investors. 4th point is realize that knowledge of markets is most important. Most investors who panic and exit markets are investors who have no knowledge or half knowledge. They are not investors who have learned about markets systematically and completely. In bull markets, investors are in a hurry to invest. In bear markets, they realize we need to learn first before investing and earning in the future. Nobody knows until when markets will stay weak. It is not even required to know about the bottom if you are a long-term investor. As we had mentioned in many of our previous videos, don't change your approach just because markets are in a bear phase. To feel comfortable with any market fall, you need to be able to mentally visualize a 25% fall in your portfolio value. This will help us manage our emotions. Once you visualize one of the worst case scenarios, then you will not panic if and when it actually happens. For example, if your portfolio value is 10 lakhs now, imagine that it will fall to around 7.5 lakhs after some time. As long as you invested in fundamentally strong companies or good mutual funds, after sufficient research, market falls are temporary if your vision is as long term, such as 10, 20, 30 years. End of the video, here is a question. How are you feeling about your portfolio currently? Type one sentence or a few words in a comment section. In case you are not the member of this channel, this is the time to subscribe, press the bell icon, send the video to all your friends. The video is good, press the like button. Thank you for watching. Bye bye. All the best.